Hi, everybody. Welcome to another edition of Your Money Radio. Let's see here. Danny Stewart, Alex Katutis, Hunter Mozingo, Don Vandenbord here with you live. New digs, new settings, new COVID, uncovid. We're uncoviding procedures here. So I won't spend too much time on it, but Zach, not Galifianakis, is with us right here. Zach,
yes.
Zach, our producer, is back. We're doing better video, better production, better everything, more better information. I think the show is going to be
better.
It's more better, right? Number
Better
350. And so what I don't want to do is spend a lot of time on the new digs. As you'll see, live camera action switching will make this feel like a very live broadcast. Because I always say when we're with you, we're live no matter when you're listening to us. And so with that in mind, I think we should begin today's sojourn into the market. So it's options expiration. So third week of every month is monthly options expiration. You get a lot of screwy information. I had a whole thing I wanted to start with. But my attention is drawn to the markets as they pull back here on OPEX day. And I want to just draw your attention to the bottom lower half into my screen. Then we'll get into today's show, which I guarantee you, Daniel, today's show, and I'll share it with Stock Nerds right now. Today's show.
Before us? Yeah.
Yeah. Today's show is going to get Don's head is going to lift off of its torso, off of the neck. And it's going to go to the moon, like Dogecoin. Like that's what's going to happen with today's show. And I purposely haven't briefed Don. Hunter will, I predict, give me a head tilt like a Labrador Retriever, and Alex will mouth me. But today's show, it's better that I can't see them. This is the whole thing. I can't see the fellas anymore. It's just what the people see at home with my computer screen, with the stocks up in the 9 grid up there, or what is it, 12 grid? That's what I can't see the fellas' reactions anymore, which is probably
so you
better.
Can't see any fingers that we might be holding up at all?
Number one in your hearts, number one in your progress, right? So, but I had to tell Danny. Here's the thing, Zach. I had to tell Danny what we were going to talk about, because normally, like, you want to come out when you're doing a show or you're doing a video, you want to come out self-assured in your information. You want to be secure in your manlyhood about what you're going to present.
Confident.
I am not at all that today. Let me tell you what, I am the antithesis of that today. And so, but I think it's such good information that I want to bring it to stock nerds and market lovers. That's how good this information is. I think it is anyway. Danny, when I tell you Danny defecated on the entire premise of today's show,
Good Lord.
I specifically brought it to Danny so he could take it. Like, you ever see an elephant taking a dump in the woods?
No,
neither has I.
Nope.
But
Me neither.
I imagine that's what.
Do elephants live in the woods?
In certain parts of the world, I think.
Yeah.
Yeah. In certain places.
Well, there's two kinds of elephants, Daniel. There's the African elephant
And the Indian elephant.
and the
Jungle,
Asian, the Asian elephant. So I'm going to go. Is the jungle not the woods? What?
No.
What is the difference between the jungle and the woods?
Jungle's jungles,
To
woods,
99%
woods.
of America, the jungle is the woods.
That's right.
Not the Dan. Dan's very specific.
Like if somebody said, "I'm going into the jungle," you're saying
You would think of lions and tigers and bears.
Is that
Oh
because
my.
of Disney?
Yeah. And
Jungle
you don't-
Book?
and you don't know.
Are you literally doing?
You don't have
geography
lions.
based on Disney?
You don't have tigers in the woods in
So the
Colorado.
jungle technically has lions and tigers.
Not lions, tigers.
Tigers.
Lions are in the
Sahara.
Sahara. Well,
Jungle is like rainforest,
There you
whereas
go.
woods is Montana.
Montana?
Montana.
That's my
That's
best
fair.
Montana.
That's fair.
Montana.
yeah.
Okay, fair enough.
We need to introduce the sixth voice of our extraordinary producer, don't we?
Oh, we did.
For briefly, yeah, I was in here.
Yeah. Did
Yeah.
you? Was Don
He
not
was
with
okay.
us?
No, he was.
He was.
He was here.
Oh.
Did you introduce Alex?
I do you not? Does nobody pay attention to the beginning of the show? Literally introduced Alex.
It comes
Alex,
at him fast.
Yeah, like nobody wants to know who we are. They want us to tell them what stocks are going up. I like gold. Anyway, so we're going to talk about gold here in a minute. But the information. So I presented Zach. I presented the information to Danny.
Yes.
And Danny, like clockwork, you can set your clock to when Danny's going to defecate all over your thing. It's the moment you open your mouth.
My God.
He's going to take the other side of the story. Like you could say, "Hey, Danny, they've got this
Devil's advocate.
devil." Yeah, that's you.
Mhm.
And so just devil and stop there. So like Danny, I could come up with, "Hey, Danny, I got this pot of gold. Do I have to carry it myself to the car?"
It's
like
he-
he would
it's heavy.
find he would find the complaint in it. And so what I'm going to present here in a few minutes after I talk about what I want to talk about right now, I think is illuminating, and I think stock nerds market lovers will find it interesting. But I don't know if it's my best content because I'm kind of walking in on crutches on this one. Normally, I want to be standing on my own 2 feet from on high, going, "This is how the world is."
That's right.
But on this one, I'm kind of looking up, going, maybe.
You're a humble man.
Well, I'm an honest person.
That's true.
That's exactly what we are.
Yeah, don't get carried away, Zach.
Let me show you this. Well, I can't help it. I'm good looking. I mean, that's God given. Oh, speaking, man. I don't know if I have permission to use this. My mommy update of the week. She sent me pictures of. I've got pictures now
Of Hunter.
Hunter, me mommy, his brothers. Hunter, they're really nice. Like I love that me mommy includes me in her weekly emails. I get weekly emails from me.
Did you scan them so you can put them
No,
up on the
I
radio?
don't know
You
if I
can
have
put them on the
I don't
show.
know if I have permission to do so. But I think,
Well, you ask her.
Are
Hunter.
these recent pictures?
yeah, the graduation.
Oh, I thought they were
Okay.
embarrassing
Okay.
kid pictures.
Oh no, I wasn't. No, I don't ask her for anything. Like I just enjoy seeing her, and she's really proud of her 3 grandsons. Let me tell you something. And
Yes, she is.
this rocket scientist in the family, I think trumps Hunter. Like if Hunter was the top dog in that trio, Hunter, are you the oldest?
I am the oldest, yeah.
Yeah, you're dethroned because
Wow.
she is way more proud of this.
I've been dethroned for a long
Oh, okay, so I'm not
You know,
breaking
get
any
in
news
trouble.
because I got the sense that we are proud of the rocket scientists because I'm proud of the rocket scientists.
No.
Like what this young person wants to do with his life is really freaking cool. So anyway, Hunter,
If
what's your
you're
brother's
he's
name?
the good one.
Hunter, what are their nicknames?
I don't know what Christian's. That's my youngest brother. I don't know what his nickname is.
We haven't given them
Zach-
yet, Don. Zach,
So we
Zach
have
is
to-
what?
Zach is Zach Attack. That's about the only
closest to a
one I can
nickname?
think of with it. I mean, that's pretty weak to be honest. But
Sweetums tops them all.
I don't think. Like I've got a few. I've got
That's
a
Hunter's
few.
nickname.
I've got Sweetums, Sky Talker,
Oh,
which just because I talked a lot as a kid. So, but
Yeah,
Christian
but that
doesn't have one, so
haircut,
we'll have
that
to think about
haircut,
that.
you do kind of look like Luke a little bit.
with a Luke Skywalker.
Yeah.
I'm gonna say that's a compliment. I mean, I feel like
I don't
I don't
think
think
he
that's a
was.
bad
What's his real name?
Mark Hamill.
Mark
He
Hamill.
got in an accident. Is that why he stopped acting?
That's actually why at the beginning of Empire he gets attacked by a monster and he's in a tube at the beginning of the movie because they're like, oh, he got in a car accident that would make him look natural in the world of Star Wars. That's why. Yeah, because he got an
This
accident
show-
right after New
This
Hope.
show takes so many twists and turns.
It's crazy.
That's the best part about the show. So real quick,
God,
what
your
I'm
father.
What I'm talking about here, the bottom left-hand side of your screen, I want you to look at the dollar. And I'm going to circle the little letters there that say Friday. And I want you to notice how the start today, the dollar comes down. And now on kind of the center of your screen, Danny, I apologize. Danny can't see any of this. now
I'm
because
visualizing it right now.
That's
3D. 3D.
I'm trying to paint. This is the part about, see, the podcast isn't watched by everybody. We do have a big download audience. And so I'm trying to paint the picture. But you can see the market starts up like, and it kind of peaks here. It's from dark gray to light gray. And what you see there is the result of the dollar coming down. Markets go up. And that's the relationship that's happening right now. But look at the markets as they pull back on the day. And these are just 5-minute charts on the day. And that's a dollar market relationship. And so what's interesting about this is the dollar right here. So the dollar, don't say it can't go any lower because the dollar, my target was around 88. And it's right now forming here. It's really at a big level of support. And so just look at the markets in relationship to this tiny little move, right? Like from here to here, from this tiny little move, and what the market's 41.85 to 41. We'll just call that 41.55. That's 30 S&P points. 30 S&P. See, the ranges are so big here. People are skewed, right? So 30 S&P points, 3 times 8. That's 240 Dow points. That roughly the math is 8 S&P points. 1 S&P point equals 8 Dow points. And so these are really big moves or wide ranges. Now, they're not out of the norm for a day. And like, well, Tim, how do you know that? You're just spouting off information you don't know. Well, I do know that, and I'm going to show it to you right here. And you can know it too. So over the course of a day, over the last 21 days, the average true range of the S&Ps has been just about 58 points. That, my friends, is wide range, and that is volatility. And so even though it's been trading on the daily chart here over at a tight range, nothing is really, I think, serene under
The hood.
Yeah, under the hood of the S&P. So you can do the same thing for the NASDAQ. But the dollar is going to drive markets next week. And I want stock nerds to, not DX, DXY. No, it's $sign
Oh,
DXY.
we can see typos in real time on Tim's screen.
Oh, you saw those before. Like, look,
They were just smaller.
that's right. they weren't in Panavision.
Yeah.
And so if you see the dollar is now up for the day where it started lower for the day, and let me get that nonsense out of there, and we'll see how markets finish out the day. But that is a very interesting relationship, and I believe that drives markets next week. And so to the point that, well, when was the last time? When was the last time that markets went back to the mean? I feel like we needed a dry. See, if we're going to have a drop into the show, it would have been.
Seeing if I'd had my little voice thing.
You don't have.
I could have made a noise.
You don't have Back to the Future on that thing where he says we need 521 gigawatts. Yeah. Which I don't even know if that's
1.21 gigawatts.
That's what it is. Thank
The
you,
hell is
Zach.
a
I
gigawatt?
appreciate that. So here is the mean and of the dollar on DXY, and here's 1, 2, and 3 to the upside. And so here is the time frame. We'll just do this live. 429 up until 5.5. And so let's do it over here. And we'll do 429 into 5.5 on, say, the QQQ. Oh, used to be 4 Qs. So 429. Here's 429. And look at the NASDAQ. Oof. Yep, right. And so the dollar, and we do S&P, so let's do S&Ps. We're talking S&Ps. Sure, it didn't have to move the arrow. And so you can see that if this if the dollar were to revert back to the mean, meaning the dollar goes higher, look at the point you're starting with in SPY. You're starting from a lower point. So I would think you're going to come down and test that recent low at 403. You're at 415. And let me tell you something. If you get a 10-point move in the S&Ps, SPY, not a 10-point move in S&P futures, a 10-point move in SPY, because stocks are still, quote unquote, Kathy Woods overvalued. It's going to feel like you're falling out of bed. Okay? And you'll see, and it really is no big deal on a weekly chart, but you're going to hear the media tell you that this market is topped. You're going to hear a bunch of nonsense in the media. And they might be right. I think we're in a quarterly topping process right now, but who the hell knows if I'm right? I don't know if I'm right. You're not mouth breathing at all.
No, I'm not.
Man.
I fixed it. I might have fixed the mouth breathing.
I've got my breathing under
So
control.
Danny's got it.
I've been doing yoga.
I see. All right.
So
Excuse me. Here I am
Downward
riding
dog.
Yeah. Working hard.
So it'll be really interesting to see that. I had not planned to do any of that, what I just started with before, but we're sitting in the studio here listening to some Queen before the show, and I saw this. I'm like, let me talk about that to start the show.
Sure.
Danny,
Yes.
now to what I really want to talk about, which is
Me? No.
Yeah, well, you're going to factor in big here. This is where I need Don to come back to me, because there's no interest rates, right? Like there's no interest that checking accounts or 0.0 whatever.
CDs,
Nothing.
short term, but you can't make any interest in quote safe stuff.
So this is where the show is going to get sloppy. And I'm just going to tell stock nerds and market lovers right now. The show from this point, I don't know what time we're into.
13 minutes.
13 minutes into the show. It's going to get a little sloppy. You're going to say, where are the guardrails? How are we containing this information to make money off of it? But I'm going to end it. I swear, when I end this segment, we'll all be a little bit better for it.
Okay.
All right.
Okay.
All right. I believe you.
He's even briefed me just a little bit, not everything, and I'm still nervous.
I'm a little scared. I don't know where this is going. Yeah.
Well, okay. So, man, I was going to do, I'm going to save it for the end. I'll save.
Okay.
There's a chart here, but I've got, so.
I'm going to write that down so he can bring it back. He'll
Please do.
forget,
Whatever
he'll
that
forget
is.
There's a chart here.
When you say there's a chart here, I'll know that there was something else I had planned in my head to do.
Perfect.
That got me into the show before I wanted to do that whole dollar.
Your head's a scary place to be, isn't it?
Maybe not. So here we go. I wanted to use a reputable source when talking about cryptocurrencies because it can be a scary place, right?
Yeah, a little volatile.
Volatile. So I got an article here from the Harvard Business Review, and let me just cut to. I don't want to bury the lead of the story here because I'm not talking about cryptocurrencies and they fell 30%. listen, Stock Nerds and Market Lovers, before you tune out, just come back to me, okay? Here's where the show gets really interesting for you. Here's where I think you can help yourselves and join in and add some of your thoughts to the show at Revere Asset. Dan at revereasset.com. The complaint line is 855-732-5932. All complaints about the show, compliments go to Tim at revereasset.com. All complaints to the show are called at only 855-732-5932. So here's a Harvard. I'm going to show you how to make up to 8.6% interest on your money.
Yeah.
Oh, look at that. We need a camera on Zach.
Yeah.
Yeah, Zach's like 8.6%.
Zach
Tell
woke
me
up. He
more.
was dozing off over the corner.
Yeah. So
spinning plates.
So better than CDs, better than your checking account. Now, because I said cryptocurrencies, it scares a bunch of people. But there's some things that you have to understand about the decentralized markets in all my research, all the charts that we're using, just like everything from every other show. If you want my sources, more than happy to copy and paste and send you an email. Send it to you. As a matter of fact, you know what we're going to do from now on?
Yeah.
Show notes. You're doing show notes,
I'm
right?
doing show notes right now.
Yeah, you're doing show notes right now. So maybe we'll just take your show notes. Don't. Zach's not a sword. Zach is a calming force.
It's true. Very zen over here.
Yeah. Maybe we'll take Zach's notes. We'll actually make them available, and we'll attach them to the email that goes out to all of our subscribers. Subscribe for free at revereasset.com.
Yeah.
And so here's cryptocurrencies. We're talking about DeFi. And so the idea is catching fire. Deposits, they grew. You can see they grew a bunch. But the premise, the fix of longstanding inefficiencies in crypto finance, capital being kept at non-zero opportunity cost, that's kind of an issue, right, with cryptocurrencies. Now, you take that there's a lot of people, you take what's described here. Just read this. I don't want to read to people anymore.
No.
But this lower risk approach,
They
I'm
can pause the
highlighting.
video.
Yeah, pause the
read this whole
video,
thing. Go nuts.
read this. The bottom line is, because there is a bunch of people out there that want to short cryptocurrencies, and there's more than just Bitcoin. Like
Yeah.
cryptocurrencies, if you imagine the yen or the Aussie dollar or the euro
Yeah.
or now the pound or the dollar,
Sure.
that is crypto world. Crypto gets lumped into a big basket, and so there's Bitcoin, there's Litecoin, there's Ethereum. Then from there, there's like tokens and
All kinds of stuff.
yeah, and you know, just like there's the renminbi, like there's different currencies, okay? And I know some people are like, okay, Tim, okay, but just bear with me because I'm trying to bring the whole audience along.
Right.
Like we win as a team.
Right.
When the whole audience is on the same page and we're charging forward,
Yeah.
we have a better chance of scoring.
It's true.
Yeah.
Rising tide.
Rising tide lifts all ships. So we're bringing everybody along here. And so now when I'm looking at this and I'm thinking, okay, well, how can you make more interest, like the big trade this year? How can you make more money than just trading cryptocurrencies? Because if you've been trading cryptocurrencies, take this week out, right? Like just back in 2019, like in February of 2019, Bitcoin, Danny, was what, like $3,400?
Mhm.
Yeah. And now it's trading what? Who's got the price, the current price right now of Bitcoin? Just somebody throw it out there, please.
Well, it was 38.39 this morning following
go.
the news from China.
I would say that's a gain from 20, you know? And so like most people just relied on cryptocurrencies to go up to satisfy their appreciation, right?
Mhm.
But there's a bunch of people in this world that want to short cryptocurrencies. They want to short Bitcoin. They want to short Ethereum. And Danny, can you please explain in like really small words and even shorter sentences what that means when you want to short a stock or short a currency?
So when you want to buy low and sell high, right? You want to buy something, you want it to appreciate in value, and then sell it for a profit. But you don't necessarily have to do that in regular order, buy and then sell. If you think something's overvalued, overpriced, and it's very high, and you think it's going to come down, you can sell something you don't own first. Now you have to borrow it to sell it, but you borrow it and you pay a little margin interest. You pay interest to borrow someone else's stock or shares, whatever it is, to sell it. And then later when it does go, hopefully it does, but if it does go down, then you can buy it back to unwind the transaction, and hopefully you have a net profit after paying the borrowing cost.
That's fantastic. That fantastic explanation. I'm not being facetious, but that genuinely was
Thank you.
fantastic
Thank
explanation. By the way, this article, if you just want to Google it, what happens when cryptocurrencies earn interest? Harvard Business Review from this year, February 2021. So, and I feel I'm not late to this in terms of scope and time. Like, I just wish I would have discovered this so much earlier, because this has been going on for years, and I've not been privy to this until I was preparing a week or so ago for this week's show. And I'm like, gosh, this is really interesting information. So real quick, Danny's words are now kind of, we're going to take it one step further. Okay, how interest accounts work. So how can you earn interest on Bitcoin? And so what Danny just said is kind of here. So this is blockchain.com support. By the way, all the information to which I present is for what, Daniel? Edification purposes only.
Research and edification, not
never,
advice.
Never, ever to be misconstrued advice. When advice, seek advice, all you have to do is call 855-722-5932. So I don't have any, we have no affiliations with anything on these resources. We're just presenting information. So how interest accounts work. So we're able to offer competitive compounding rates on cryptocurrencies because users who transfer and hold crypto with us, we do this by lending crypto deposits out to selected, rigorously vetted institutional and or sophisticated borrowers. What those words mean is what Danny just said. That there's people out there that think it. See, they don't want to come right.
And also, they have to vet them so they make sure they give it back.
Yes.
Yeah.
So what they're saying right there is, and they don't want to tell you this in layman's terms. The beauty of this show is that we break things down so people can understand them and take action on them and make themselves money or save themselves money. That's the whole point, is to not talk as if we're Johnny Highhorse. No. JJ Snuffington III and fourth and fifth because I procreated. No. The whole premise of the show is to make the complex enjoyable and simple so you can flourish as an individual investor. We're here to empower. And so, but what blockchain.com doesn't want to come out and tell you is there's people out there that think it's going down. And so, because that might discourage you from buying said crypto, right?
Yep.
If you were told that there's a whole group, lay people in the markets, I don't mean that rudely by any means, but if you were told that, hey, there's a group of people, like a large group of people that think that thing's going lower, it might discourage you from actually purchasing it or going long. And so they don't want to tell you that.
Like last week.
Yes, like last week. And so what they want to do is just kind of lay out factually what's happening, but not tell you they think it's going down. And so you can short things, like Danny said, as a reminder, that you don't own. You have to borrow them. Okay? And so what they do is they charge the people who are borrowing an interest rate. Mm-hmm. Well, how do they borrow something? Like, how do these companies get the asset, the cryptocurrency, in this case, to lend out? Oh, they come to people like
their client base.
Or they come to people like Hunter or to Alex or Don, and they say, hey, I see you've got some Bitcoin. Would you like to make 8.6% interest on your Bitcoin? And Don going, hey, I'm not getting anything on my checking account, and my Bitcoin tends to want to just go up in price, or in a vacuum, maybe trade sideways, not correct, 40% off the highs. Just saying. He might be, or let's pretend Don's a HODELER.
A HODELER?
Yeah, Danny, a HODELER.
A HODELER?
HODELER.
Okay.
Hold on for dear life.
Oh, yeah, okay, I see that.
Yeah. HODELER.
I was about to say, is that related to a yodeler?
Yeah, a HODELER. Don's a HODELER.
Adds up.
We guys should get a Don a HODEL shirt. Hold on, Don
Don
loosely.
is not a hodler.
Oh, I thought it stood for hold on, Don loosely.
But don't let go.
Depends on what you're holding on to, Don. And so it's so good that I can't see anybody.
It's good.
It's really good.
Imagine how distracting it would be if you could see all of us.
Yeah. So now let's pretend Don doesn't care. Let's say Don's been dollar cost averaging in Bitcoin since Bitcoin was created, right? And Don's a HODELER. Well, he don't care. Hey, Bitcoin go up, Bitcoin go down. I'm a Bitcoiner. And by the way, that is a prevailing attitude in Bitcoin world, cryptocurrency world, okay?
Mm-hmm.
So Don's like, I'm going to get 8.6% on my Bitcoin. I don't care. Go up, go down. It goes up and you get that interest rate. You're like, damn, I'm living life. And it goes down 40%. You got to maybe want to think about what's going on there, maybe trim a little bit. But look, now let's cover this. Let's go to BlockFi, okay, which is legitimate. I believe BlockFi is the Winklevoss twins of Facebook fame, if you remember Facebook fame. BlockFi is super interesting here, where how to earn. See, Danny, I'm introducing now a new word. Now, older viewers of the show, they know the word compound.
I thought you were going to say the word earn.
You mean like Smith Barney? They earn
That's
it.
right. Yeah.
Yes.
You got to earn it.
You got to earn it.
Busy earning.
Who was that actor? He is long gone. Speaking of long gone, I am not making this up. As I pulled my phone out, I texted my friend Jeff this last night. So I put myself to sleep, Daniel, with the YouTube at night, right?
Mm-hmm.
I don't have a TV in the room anymore. I got rid of that. But the YouTube, that will soothe me to sleep.
That's right.
And so, like, you know how YouTube has an algorithm?
Yes.
And it picks the things. And so as I'm going through, like, my phone, just put it face down and listen to whatever I want to listen to. Maybe it's a football game from like 1975 or something, something lame like that. No, you know what YouTube sent me last night to scroll through? How each cast member of Barney Miller died.
Wow.
My God.
You can't make that up. like first off, who put it? First off, I know Zach and Alex don't understand what Barney Miller is, but our older audience does.
Oh, it was a classic show. It was funny.
Cop show from the 1970s with Hal Linden. And so, who took the time to go over every cast member in Barney Miller and how they died? Not in the show, in real life.
Right.
Yeah. Like, just something to break up.
Some old nostalgia fan wanted to know, and somebody somewhere was like, I'll put it all in a video.
I don't know, but I saw that right away.
But you got to sleep.
My God.
I didn't listen. No. I didn't listen to it. I was afraid that it would creep into my dreams.
Permanent sleep.
Yeah, I was afraid it would scare me. So now back to compound. So how to earn compound interest on your crypto. Compound interest is the greatest invention in life, isn't it? It's one of the greatest, like water, fire, food.
Those are pretty good.
Love.
Yeah.
There's like things up in the upper echelon and like air.
It's one of the universal truths.
Yeah. But if you compound, it is a thing of beauty. And compounding interest is extremely powerful. And so you can you pause the video right here. You can read. Oh my gosh. I just scrolled up. You can't see this, Danny, but limited time offer. Earn 10% on new stablecoin balances until July 31st.
They're listening to you.
What a deal.
They know.
They know.
And so here, how does compounding work? Okay, you can read this at home. I'm not going to bore you with how compounding works. That's not the point of this whole segment. But it's really freaking powerful. And this is where Danny started getting into the I don't believe you phase of the conversation. Because, Danny, how do interest rates in modern times work? In the era of artificially low rates, and artificially low means that they're sweet and low, an artificial sweetener, which is no.
That's funny.
Dad jokes are how I roll.
I'll take it.
Ben Bernanke, Janet Yellen, and now Jay Powell is how they roll. Like they put these low rates in to encourage capital investment, encourage commerce.
Well, to force you out of CDs and make you
go into risk assets.
Yeah.
And so it's really interesting here because nobody has compounding interest anymore. Compounding interest was a thing of beauty in the 70s, 60s, 70s, early 80s. I had a passbook at American Bank when it would get 10% interest, and it compounded daily.
Those were the days.
And so if you can compound daily, you're doing something in life. And so you can see here in this example, and this is where Danny and I this is the moment where Danny defecated all over this segment. And I knew it was
just
coming.
explained it to you and brought you to reality.
No, please. Right now, what I want you to do, because I'm gonna progress on to the unbelievable. Okay. But what I want you to do is set the table of the new norm and what is believable, because I'm about to cross the live fantastic and go into the unbelievable.
And then I'll bring you back to earth.
Okay, fair enough. Go ahead.
Oh.
Yeah, that's you.
So, I'm sorry. I thought you were going to still keep going. So when they talk about the 10% compounded daily, that's an annualized rate for the year. So the compounded daily gets up to the 10% a year. So and 10% is a good rate. Now, in these cryptocurrencies, they're actually paying you that 6%, or in one case, that other currency crypto was 8%.
Mhm.
They're paying you in the cryptocurrency. They're not paying you an interest rate in dollars. Okay. So it's very similar to a dividend reinvest stock plan. Like if you think Apple is a great stock, a stock that pays a dividend, and you're getting a 5% dividend yield or 6% dividend, and you think that stock's going up, that dividend reinvest is a good deal if it's going up. If it's going down, is the dividend, what's more important, your principal or your dividend? So like last week, Bitcoin went down 30%. So even if I'm getting 6% annualized, losing 30% in 1 week. Now, over the long term, it does add value. If you're a buy and holder of crypto, it's a great way to go. It's a great way to lend your crypto, as long as you can verify they're going to give it back. Because remember, it's all encrypted.
Hold on.
Yeah,
I'll put no pause you right there for 1 second.
Yeah.
But stock accounts aren't FDIC. They're insured by Civic.
Yeah, SIPC. Yeah. And the Schwabs and Fidelities and TDs of the world, they have private insurance too. So I mean, they'd be on the hook for a lawsuit if they didn't get your stock back.
100%.
But here's the whole point. So when they tease those rates and put that 6% and 8% in there, you got to read it carefully, because it is actually in the crypto. It's not in dollars, which is fine, but it's really like a dividend reinvest plan. It's like a crypto reinvest plan. And so, and if you're going to hold it, now the other thing you got to do is you got to see how fast you unwind it. Because like on a margin account, you can always say, hey, I want my shares back, give me back. So like at Schwab or Fidelity, they lend out shares. If someone wants to sell Tesla, they get all their
Short Tesla.
It's short Tesla. They get a whole bunch of people that own large blocks of Tesla shares and say, hey, you're holding this anyway. Would you mind lending us? We'll pay you 5%. Normally our lending rate is only 4%, but people really want to short Tesla. We'll give you 6%. And they charge the person that's shorting 8%.
Mm-hmm.
They make a spread off it because they're making it to make money. But
they're a bookie.
Yeah, they're exactly.
It's what they are.
Exactly. And so if you wanted to sell your Tesla and said, oh, it's going to, I just want those shares back, you can get them back. So the thing you need to ask is, A, are you planning on holding that crypto or holding it long enough to make those dividend reinvest worth it? And number 2, what would be your exit strategy? But if you're accumulating, like you said, there's people that are just buying and holding. Absolutely.
Right. And so as you're looking at your screen, stock nerds and market lovers, I just took some marker marks off of there. You can go back a few seconds while Danny was talking and just pause it. You can read. But it was saying here, and maybe I should re-highlight this just in case. For the example, using similar to the one above, let's say you deposit 1 Bitcoin on February 28th, 2019. Bitcoin is about $3,500, maybe $3,800 around that time frame, earning 6% compound interest annually. On April 1st, you have 0.005% Bitcoin, and just like that, after 31 days, you earned 0.005% Bitcoin interest. That turns out to be like $267, $270 of interest, based because if you convert it to dollars, like on $3,800 in that span, you earned $265, $270. That's based because it's based on the price of Bitcoin. Yeah, anyway.
It's quoted annualized.
Yeah.
So you made that 260 for the year.
But you can see, here's the crypto earnings chart. And let me just make my screen as bright as I can so folks at home might not struggle to see this. We have the ambient lights on and the screen color got adjusted. So you picked up here that much Bitcoin through an interest. And so if you started with 1 Bitcoin, didn't add any, you now have 1.062. And so and then you can scroll. I'll send you all of this information if you want it at home. But what's interesting is now we're going to go to this other chart. So there's limits, okay? And this is where Danny further defecated on the whole idea. But he did it out of love. I know he did. Because it's not traditional. And here's like at BlockFi in particular. So if you have 0 to half a Bitcoin, you'll get 5% right now. Mm-hmm. If you have more than 5 to 20 Bitcoin, it drops to 2%. So the more of the asset you have.
That's unusual.
See, that's not.
Because usually it's the other way. The larger block of stock shares like Tesla you have to lend to short, that you can say, hey, give me more interest.
Right. But look at this, and some of the more popular things that are out there. Ethereum 0 to 15. Ethereum is at 4.5%. Litecoin, anything greater than 0 is at 5.5%. Now, this is the USDC. This is a stable coin tracked to the US dollar, okay?
Mm-hmm.
And that's giving you 8.6% for that coin. So if you have some coins, some USDC that you're willing to lend out, so people can short them, you'll get 8.6% for your troubles. And now that's
Now
supposed
that is completely different from all the other ones, because that's a stable coin as opposed to the other one, which are cryptos and will float in, as we can see, up and down in huge percentage changes on a daily basis. That stable coin, that US dollar coin, is tied to the US dollar. So saying you're going to get 8% is like, and you're a hodler, you can be the hodler of a junk bond that's paying 8%, but if the bond ultimately goes to 0, you're not going to get your money, and who cares about 8% if you just lost 100% of your principal? That is the closest thing to actually getting 8% on something that is the equivalent of something as safe as you can get in the crypto world.
I feel
Don
Because
just
the
hit it out of
value
the park,
flows pretty
man.
much stays right around $1.
I feel so good about this segment now. I came in very unsure of myself. I came in very weak.
You said it was going to be slow?
I was sweating. I was thinking that this is going to come out like a hot mess. But because Don just picked up on the exact point I wanted to make and said it much better.
I was thinking the same thing when he was jumped in.
This is the exact point. And so when you go back to, just real quick, Don, that was really freaking good. That's what this article in Harvard Business Review is about, is that there's stable coins out there. You don't have to, excuse me, as I keep
you don't have to go the roller coaster.
You don't have to go the roller coaster route. You can get 8.6 on a stable coin. And then for you at home listening to this, you're like, I can get 8.6 on a stable coin. There's no such thing as a sure thing. I mean, I still say it's the markets and anything can happen. This is a whole new world, like a Disney, a whole new world. What movie is that from? A Whole New World? Anybody?
Oh, God.
Aladdin. Lion King. Aladdin.
Whole New World?
Aladdin.
It's gotta be Aladdin.
Prince Ali, Fabulous He Ali Ababa,
Yes.
Robin Williams, best role ever.
It's good stuff.
That's what I'm talking about.
Yeah.
So, getting back to stablecoin.
I was thinking, I thought it was Prince Valiant. that
Newspaper
was
comics
toward
book?
you, Hunter.
Yeah.
So now that you see it's, excuse me, I'm on the wrong page. This stablecoin. Let's just take it one step further, because there is such an air of unbelievability to all of this. And I'm with you. If you're at home going, this can't be true, I'm with you. Like Danny, I'm making a point that Danny came in and Danny was just asking normal questions. Like none of this.
I'm a damn genius.
Why do you make me?
I'm just teasing. I love breaking your tempo when you're on a roll. Yes.
I'm a damn genius. Can we get that as a drop on something?
That's a good one.
Yeah, I was going to say we should probably cut that at some point.
I'm
for
a
the show.
damn genius.
Yeah.
I'm sorry. That's a phrase I use at home all the time, because Cindy will go.
Is that why Cindy?
Cindy will go, how do you know that, Dad? And I said, because I'm a damn genius, honey.
Damn genius.
Sid the Kid, man. Oh, so
With a J.
that's exactly how it's spelled.
Genius.
Yeah.
Genius.
So USDC. So it's stable, right? And this has just this unbelievable air of unbelievability to it. Like it just, I can't be true.
Unbelievable air of unbelievability.
Yeah. So now I want to take you to this chart. So I'm going to get it off here real quick. Now this chart is how you can calculate all of this. And I mean, they're giving you their rates right now. We're still using BlockFi. We haven't switched from a different source, BlockFi. Okay? So I've got in here 1 Bitcoin and the crypto amount. And when they say crypto amount, I'm pretty sure they don't. I was doing this wrong earlier. So I'm going to do 1, Danny. I was doing 2,500 and I was doing in dollars.
Mm-hmm.
And so I was doing, so I don't know what this is going to spit out to.
Mm-hmm.
But let's see, with BlockFi interest, your cryptocurrency account can earn up to 8.6%. So up to. Interest accrues daily
But that still is an annual.
and is paid
Total.
out monthly. There are no hidden fees, no minimum balances, and no reason to wait. And so you can see that. Again, we have no affiliation with any of these things. So I'm going to put in 1 Bitcoin. Okay, and so you can see here 1 Bitcoin.
So at the end of the year, it'd be 1.08.
It's
whatever.
1286.
Okay, yeah.
So, but that's still better. Like 1 Bitcoin is how much? So Danny, just do it real quick for me. How much is Bitcoin right now, Hunter or Alex?
36.
37K.
37K. What? Someone give me an interest rate right now on a checking account, and I could Google it. I just don't want to. Somebody throw me an interest rate.
I mean, it's going to be essentially zero.
Right. So if you have $30,000 for 1 full Bitcoin, I wonder if we can do decimals. Like what? I know that it'll be half. I get it. Yeah, you can do 0.5 is $900. But let's do 1.
900 Bitcoin.
Well, they convert it to dollars for you on this chart.
Yeah.
So that's 1 Bitcoin. So we're going to do 1, okay? But we're going to change it. Let's do Ether, which was a higher rate. So 1 Ether is $110, okay? And Ether is, what's the price of Ethereum right now? Anybody? It's like 24.
It is.
They say don't
One
let.
second.
That's all right. I listen.
24.50.
24.50. So $110 on 24.50. You put $2,400 in a checking account. You're not getting $110 out of it at the end of the year. That's
4.5%.
Yeah. And so now, what if we did USDC, which was the stable coin? 1. You put 1 in there, and USDC. So you could conceivably have a lot more of this USDC since it's tied to the dollar. I'm just going to put 10,000. You're coming out with
There it is.
860. It's 8.6. That is, and if you go back to the other chart, excuse me, was it this chart? It was this chart here. USDC, it's just any amount greater than 0. So they don't have a cap, to my knowledge.
Oh, yeah. And some of those
So
Bitcoin things you can put in a few dollars to.
Right, but they don't have a cap. And so if you wanted a BlockFi to get 8.6 on some money that you might normally have sitting in a checking account, or let's just say savings account or something. Look, I, Danny, Hunter, Alex, Don, Zach by affiliation are telling you to do none of this at home. As a matter of fact, I want you to take the tape that you're listening to, throw it in the trash, then light that can on fire. Everything we're doing here is for your edification purposes only. I can't tell you how much I don't want you to do this. Because if you come at me and say, I did this and I lost money, it's your own damn fault. So let me just explain this very clearly, folks at home. You're on your own. Not advice. Edification. Making you aware of something to which we are aware of and passing it along. You can get in your car and go
That's
somewhere.
what's known as a disclaimer.
Yeah. I couldn't disclaim this any more than if I came to your house, took the device you're listening to, and just walked out of it.
Well, let's keep it, very simple. So on the interest rates, the margin rates that the brokers pay, they pay a higher rate for more volatile stuff. The reason they do that is just like an option is because the odds of it really moving big, and the more it moves up and down, the more people that like to short things, bet against it, are in demand. They're not going to short a very docile, slow moving utility stock, but everybody loves to short Tesla because it bounces volatility. So these things are volatile, and just remember, maybe with the exception of that dollar-backed one, I'd like to do a little more research on it. These other ones are really like a dividend reinvest, but it's got a decently high dividend rate. Why? Because they bounce around a lot. So as long as you're bullish long-term and you're willing to hold for a while.
Out of all the topics we've done, and I think the last 2 or 3 months of shows have probably been the best we've done topically in terms of taking some complex concepts, breaking them down, making them very usable. This, by far, to me, is one of the most interesting.
It is very interesting.
And I don't know how long the party lasts, but I've been fascinated with compound interest forever.
Well, and look, there's got to be something to this whole thing because companies are moving toward it. Banks are actually moving toward it because I think they're a little bit nervous that, hey, if it takes hold, we got to have a backup plan. We got to have plan B if this does. The government's even talking about the they're having a government-backed
Right.
currency. Here's the real risk to the Bitcoins of
Hold
the
on.
world.
As a joke, our government or China?
There's a difference. Ow! But the biggest risk to the cryptos like Bitcoin is, I think, government regulation of
Right.
governments. They're already now requiring, look, if any transaction over 10,000, we want to know about. We want to know, and they're not going to go to the individual, rely on the individual to be honest and tell them. They're going to they're going to go to the Coinbase and the exchanges and say, "You're good. We want your list. Give me a list."
And so here's the stock numbers market lovers at home. Look, there's no free lunch. So these sites, BlockFi, Coinbase, doesn't matter who, they all have fees. Like
Yes.
the knock on Coinbase is that as more competition comes into the mix, the fees that it's if you don't go Coinbase Pro, which is you're paying up for not paying fees. So
Yeah.
if you're an active trader of crypto, you probably have a Coinbase Pro account and you don't pay as much in fees. But if you're just a regular user, like a casual user of Coinbase, you pay coming and going. Just, it's almost reminiscent of the 90s brokerage fees.
Sure.
Yeah, and so not the 80s like the really high, but the 90s where it was it's a little bit
Starting
better.
to get squeezed.
Yeah, a little bit better. That's kind of where Coinbase is right now. So I am fascinated by compound interest, right? And a lot of people don't, they wonder why algorithmic trading, why it's such a powerful force in the marketplace. Like they fight tooth and nail to keep algorithmic trading going. They say they find a whole bunch of reasons why to keep it in the market, saying it makes the market. It keeps
Liquidity, right.
a whole bunch of other things. But I want to show you that if an algorithm written by why it's so powerful, real simplistically. So on my screen here, you can see a compound interest calculator spreadsheet I created. And so what you're looking at here is if you put $2,500 into an account, okay, and you can make a minimum of 2.5% daily. There's 252 trading days a year. Danny, what I'm describing is not hard for an algorithm to do.
Make 2.5% daily every day without
Trade
exception.
The average trade lasts less than 8 seconds. In the market right now, not algorithm. The average trade on the stock exchanges right now is less than 8 seconds. So what I'm describing to you is not hokum by any of the. It's the velocity of money turbo-ized. Is that a word?
Turbocharged.
Turbo-ized is not a word.
Turbo?
Turbo-ized.
Yeah,
I don't
turbo
think so.
The turboicity of the move.
Turbo. Yeah.
The turbosity? Is that what you're going to go with?
No, I was going to say
Turbosity is even
That's
better.
not a word.
Turbosity surely is a word.
I don't know.
You don't think turbosity is a word?
Don.
I don't know.
It's not a word.
That was Hunter. That's not Don. The hell, even I know that. Hunter just jumping in there.
Let's call Hunter's brother, the rocket scientist, and ask him.
How do you get a rocket into the air? Is it turbosity? Because I gotta bet that it's turbosity that gets that thing to lift off the ground.
Secret turbosity.
Turbosity.
My God.
So, turbocharge.
Now that's a word.
Yeah, but turboized. I feel like turboized could be a word.
I don't know.
Like, could you use it in words with friends?
I don't think so.
Are people still playing
If
that?
somebody would call the Scrabble dictionary on that, there's no way.
Okay. Well, anyway, but this compounding interest calculator daily is interesting. 2.5%, $2,500 at the end of, and the markets are only open about 252 trading days a year. You scroll down and you're like, well, Tim, you had the answer at the top. I did. But you're turning over at the end of it about 30,000. You're turning over a bunch of trades, and it ends up at 1.29 million. That's why algorithms are powerful. Put 1% in there. It doesn't matter. Algorithms are powerful because they turn over money so quickly. That's why they're taking signals based on technicals that are taking place in the market, and they're, for the most part, some are news driven, and they're just turning the money over quickly. The average trade is 8 seconds. So now let me go back and show you this.
They're not making 2.5% a day, though. No way.
Well, here's the thing: they don't all work. So
no, that's a good point too.
Compounding works both ways. So you can lose your money really fast.
Yeah, you got to make sure. There was a case like that.
Oh, you put $1 million in, we lost it in 2.7 seconds.
What Danny described actually took place, and I'll maybe I'll bring it for next show if it's relevant. But the code was written wrong, and it caused like a mini episodic event in the markets. that there was a mistake in the code.
Now,
And-
episodic is a
man.
word. Good job.
That is a word.
Thank you.
All it takes is a 1 where there should be a 0, and it's game over. Man.
Yeah, man. In the world of ones and zeros, there was maybe one too many ones.
Yep.
And
It's just one thing.
yeah, and so it caused like a mini flash crash in the markets. And this firm, like algorithms work both ways, and algorithms for the most part are written by humans. Now, the thing about algorithmic trading that fascinates me is the algorithms that learn, the self-learning algorithms, the AI. They keep adjusting. They're self-adjusting. Boy, is that an interesting.
Let robots trade stock for us? Is that what I'm hearing?
Oh man.
Oh, God.
Be back.
Yep. So, but now, just to kind of put a bow on this pony, let me show you this calculator here. And so, to give credence to what we're talking about here in simple interest. So, let's say we take that same 2.5%. You're not getting 2% in a checking account or a CD or anywhere right now, except kind of this crypto world, right? And by the way, if you're getting any decent interest rate, it takes a hell of a lot of money, as Danny was, or a hell of a lot of an asset, and it's probably limited for an introductory, okay, not just for time immemorial. So here's simple interest. We'll start with simple interest. Danny, what is simple interest?
Just means point to point.
Kind of like
So
yeah,
like 8% simple interest, you get 8% at the end of the year, right? When you got the 8% compounded daily, it turns out to be like 8.6.
Dude, just do what you asked. Like
Extra credit. He's doing
I
wanted to clarify.
I took a drink. I was trying to stop you, and I took a drink. I'm sorry.
You were still drinking.
I couldn't stop the drink. I was mid drink.
It's coming in.
Thanks. Simple interest. So 2,500, 2.5. Start date right now. End date in the future in the year 2022. Same
Back
date.
to the future.
Right.
Yeah.
So now we'll scroll down, and this is what you're going to get over that time: $62.50 at 2.5%, $2,500 simple interest. Okay, and I'm doing this because not because people can't figure it out, because we've been in this low interest rate environment, just on this slide of since the Great Recession. That there's so many listeners to the show that either don't remember this, how it works. Oh yeah, that's how that works, or they've never seen like compounding interest. And we'll do this. So we'll take a $2,500 deposit. The interest rate is still going to be 2.5, and we're just do monthly. Okay, so it compounds 12 times. So once was simple. This example monthly is 12 times. No additional deposits are going to be coming in. And we'll hit calculate, and you'll see here.
Oops, an error.
I got an error.
Whoops.
Hold on, maybe I.
I was just about to say,
good.
I didn't audit his
Sorry.
formulas.
Wait a
I
second.
should have made sure they were right.
Here we go. So your calculation is 63, just a little bit more. Okay, now we're going to go to daily.
Like the credit cards.
Yeah. We're going to do day. You know what? What you just said there is absolutely apropos. This is why credit card debt is the worst.
Oh.
What Danny just said, because it compounds daily.
See, I'm a damn genius.
He's a damn genius, ladies and gentlemen.
You might want to put that in the show notes.
A damn genius. It's going in right now.
Yeah.
That's what needs to go below my name, Dan Stewart.
Damn
Can you edit that on the fly? I don't know what you have there.
I think I can. Yeah.
Would you just do that right now, please? We'll just finish out the rest of this thing with damn genius. DJ. So we'll do some daily compounding here, okay?
We're still going to have time to get to the stocks, right?
Well, of course. Yeah, I got an internal clock in my head. I know exactly how long we've been going.
We do need a studio clock.
No.
I was just thinking.
No. I've got
one. We're at 53.
Oh, look at that. Hey, Danny's on it. I don't believe it.
When I'm bored, the audience is bored.
He is a damn genius.
So now, principal amount, $2,500, okay? And interest rate, 2.5. Just 1 year. We're going to do 1 year, okay? Include weekends? No. No weekends, okay? Let's see here. 100%. Let's hit calculate. I think we're ready to calculate.
Error.
No, I was about to say, look at this. At the same rate, Daniel, without any additional money, compounding daily, $2,500 becomes what? $1.5 million. That's why Visa, MasterCard, and American Express own some of the best businesses in this country, even in the world, even with the default rate on credit cards, whatever it is.
Was the Schwan man here?
Yes, he was here.
It's the vampire.
It's out. I think it's
The- the-
Alex's
the- the-
wife.
It's actually coming from Don, believe it or not.
Oh, it
Yeah,
is.
yeah.
Oh. I can't see. I just thought it because I know Alex sometimes has the dog. I like it when a dog wanders in, but the dog doesn't talk, so I just went with Alex as my default. Sorry, Alex, I did not mean to include you in that conjecture. But daily compounding is so incredibly powerful. Some of the companies that are worth the most in this world, Visa, MasterCard, American Express, are that way because of this power of daily compounding. And now, the average, I don't know, can Hunter or Alex, can anybody just give me the average real quick? I'll vamp for a few seconds because I got more to say. The average, or Danny,
surprise.
the average credit card interest rate in this country right now?
No, it's going to be 16, 18.
16 or 18? Okay, I'll let them see if they can give me
They're
something.
on the Google. I can see.
Yeah,
it.
that's
They're
good. Okay, yeah. So I'll let them give me something here because we'll put that number in. And we'll just see what it is on a compounding bound. Like what? It's probably not.
Well, it looks like about 20.
20.
20%.
Yeah.
Wow.
Well, it's based on credit too.
It's based on credit. Yeah.
Oh, okay.
So you can see how powerful compounding is. And even if it's monthly, it's still a big number. Even if it's not compounding it daily, they're compounding it monthly. It's still a tremendous number. And that's why debt in your personal life is tough, even though
Insidious,
even though we're a country of spenders, and we're set up this way, by the way. We're set up as a country of spenders. That's why they lowered the interest rates to induce you into risk assets, to get you out there, putting capital into the economy. That's why the monetary look, we covered this all last week. Why the M2 supply, the money supply, is growing tremendously, is to get you out there, get you out there spending. Because the more you spend, the more you take on debt, the more risk you take, the better it is for the economy in times of strife. But the flip side of this is, just like debt, for the most part, is typically a bad thing with a company. You know, the stock market's
If you can borrow money to make money, it's good. If you can't, it's bad.
And too much debt causes you to do things like default or have to be AT&T, sell your. They had too much debt.
Sell assets.
They had to sell the assets, and they've been shedding them this year. Like they sold DirecTV, they sold Warner Media now, and they cut the dividend in half. So people only own AT&T for the dividend. Like if I pull up let's pull up a weekly 20-year chart on AT&T. So it's just, hey, and like Mr.
Well, here you're going to make the point.
Yeah.
Is the dividend worth the price?
Well, that's that, and hence Don's stablecoin and the whole discussion around that. I'll just get this to show you where you're at. 47.5. These are, think about the inflation adjusted dollars. Back in 2002, 47.50 is more than 47.50 right now. Does that make sense the way I said it?
It's worth less now. Inflation adjusted.
Thank you. I just said it back. Thank you. So you're at $29.90.
So really, all you got was dividend.
All you got was dividend. It's the only reason why people are holding AT&T is for this dividend, and because they had too much debt. Because at interest rates that are historic lows, they had too much debt at interest rates that are. We really should get some squeaky stuff on that
Squeaky wheel, huh?
Yeah, at interest rates that are so incredibly low, they had too much debt that they cut the dividend by 50%. Debt is detrimental to companies. Typically, growth companies sometimes take on debt, and compounding interest in your favor is one of the most powerful forces in this world. And so with that, let's get to the markets. We're going to check. I'm literally checking in with the markets right now, Danny. They really haven't moved during that whole segment. So
Coming in live.
Yeah, let's do this. Let's get Don's thoughts on moves. Oh, we did have a negative 1,000 tick there. That's interesting to me. I bet you we finished the day lower. But with that said, let's get Don's takes on the market. You know what? Let's save Don. Let's do Hunter. Normally in my head, I can see the people I want to go to. I can't see anybody right now. Hunter, what you got for research this week? Then we'll save Don after Alex.
Yeah, I got some interesting stuff. One sector in particular that showed some pretty extreme relative strength yesterday that hasn't really been showing strength recently is the gaming sector. So Tim, I can't see it, but if you'll pull up Take Two, TTWO is the ticker there.
Brother, I send you. I feel in
It's
you.
true. He had it on screen. I don't believe it.
You said gaming sector. I want Take Two.
He was using the Force, young Skywalker.
Oh, that is right, Mark Hamill. Is it Mark Hamill?
Mark Hamill. That's
Mark Hamill?
It is.
What I want to know is, do the stock nerds think that Hunter looks more like young Skywalker or Prince Valiant
1 second.
with that haircut?
Was Dorothy Hamill an ice skater?
Dorothy Hamill.
Hold on.
Are they related?
Dorothy Hamill.
Is Mark Hamill and Dorothy Hamill, are they from the same womb?
Mark Hamill.
like in Star
Oh my
Wars,
God.
brother and sister?
No.
No? Just an ironic
Just
twist of fate that they're both
happen.
At
Hamills.
least we just don't know yet. Maybe they
Both-
just haven't
both-
been reunited like
Both
Luke and
famous-
Leah.
Both famous. Oh, right.
Yeah, it just happened to.
Leia.
Yes.
Leah. Anyway, Hunter, you're saying Take Two, brother.
Yeah, man. Just a pretty strong move following earnings. Got back above the 200-day first. And then yesterday pretty much ended up closing right on the 100-day moving average. And today it's essentially doing nothing. It's just sitting right there. But it piqued my interest because it's the most volume to the upside they've seen in quite some time. And it's a chart that's been kind of doing nothing for the better part of 2021 and weak, actually, starting to show some strength. And then that pretty much reciprocated across the whole sector. Tim, you can pull up ATVI,
You got
not
it.
as strong as Take Two.
I'm laughing, folks. I'm not laughing at Hunter.
I forgot we have the cough button.
Then he wanted to cough, and he coughed. Then he went to go hit the cough button. We've got new folks. We've got new equipment.
There's that damn genius for you there.
Oh,
Somebody's hit his 6-month anniversary at
Two-
Revere
two-
Asset.
touche, young Skywalker.
Oh, it was good stuff. Yeah, who taught? Like, it was Obi-Wan Kenobi.
Obi-Wan.
Yeah, he taught him how to do that. Right.
That's right.
Oh, it was good stuff.
Ways of the Force.
Yeah, man.
The student becomes the master.
I don't believe it.
That was good stuff. I'm sorry, Hunter.
Go ahead, Hunter.
Activision
My
Blizzard.
Yeah, Take Two is quite obviously the strongest, but just the three that kind of stuck out a little bit over the last few days: Logitech, LOGI, ATVI, and Take Two being the primary one in the group that was showing the most strength. But they did just report earnings, so it's expected to see a little bit of volume come in, excitement, etc. Beyond that, Tim, can you pull up copper and steel?
Yeah. Well, there's no steel futures.
You don't have to do them simultaneously. Just pick
Let me
whichever
do.
one you want
I'll
first.
do HG first here. These are copper futures, and then we'll pick a couple stocks as the proxy for steel. There's no steel futures. That's why.
Right.
Or I would use steel futures.
Okay. Well, we can use SLX. It's an ETF
Oh,
correspondent
perfect.
to the steel producers. It's probably the most balanced. But I just thought this was interesting here. I think we might have talked about it either last week or the week before, that it kind of been unrelenting on the way up, and you're actually seeing copper pull back to the mean, slightly below the mean, and steel is going to look relatively identical to this. And I think it's interesting. You've also got some of the steel charts. Tim, pull up Nucor. This is the strongest name in the steel space by a decent bit. Still relatively extended here, but you've seen these steel names, the Freeport McMoran and a lot of those names give back some of that move along with the actual commodity itself and come back to the mean. So I want to keep a close eye on Nucor, on STLD. You can pull up STLD for me, Tim. Is this actually closer to being buyable? You can see if you just go back over the course of the last 3-4 months, they have these runs where they go and they get pretty extended from the 21-day or the mean for a while. They come back, they touch it, consolidate for a little bit, they continue higher. That's just been the recurring theme this year. And so it wouldn't surprise me if they did end up consolidating, and just specifically on STLD, right around the 60 area. But so far this year, the most recent 2 taps of the 21-day ended up being pretty successful trades. So just something to watch on the steel group. The name in copper is FCX. You pull that one up as well, Tim?
That is Freeport.
Pretty much.
Yep. Good.
Yeah, pretty much sitting right on the 21-day right at this moment. Very, very close to it. So just keep an eye on those. If copper and steel can start to turn around, or are they going to just kind of be stagnant for a while some other areas of the market gain some traction? And that's pretty much what we've seen is some of the growth related stocks, especially some of the former broken growth leaders, have gained a little bit of traction over the last few days, while these names have consolidated and pulled back. And my last one, Tim, is Ford, F. I believe they said and they've already been alluding to this a few times in the past. They're working towards an all-electric future, and I think Elon Musk may have gave them a satirical congratulations on Twitter. But nonetheless, it has sparked a pretty nice move for Ford, and especially if you compare it to GM, for example. GM, I believe, is still below the 50-day, just kind of sitting right on the 21, ran into resistance. So just some divergence, because those have been pretty correlated, not entirely, but Ford making a decent move over the last 2 days. And then,
did you see the lightning truck in it? I watched that on Twitter. They broadcast it live. They streamed it live. That was interesting.
I didn't watch it, but I saw a tweet about it.
Yeah, that was pretty interesting. The whole it looks like a normal truck, except you open up in England that would be called the boot, the front of the vehicle, because you use I think it's like 30 or 40% less parts. They made that a usable trunk.
Right.
So you lift up the hood, and there you can put your luggage.
There's nothing in there.
Yeah, and it's got a normal bed in the back and everything. I think it starts at the low end at like just under 40.
Really?
Yeah, but it's got the lower battery power, like the lower battery range and stuff. Like it tops out somewhere near 100,000. Like if you want all the range and the ability to generate electricity. Yeah. But the Cybertruck for Tesla, you're a Tesla devotee, I think, if you're getting that. Like, but in terms of pre-orders, they like put $100 down and reserve your spot. I think Tesla had like.
I wonder if my niece's husband's got his yet.
What?
Did you order one?
What, Cybertruck?
He works for Tesla.
No, you can't. Well, they're not out.
No. He put his order in like a year ago.
They're not delivering them yet.
Yeah.
Well, when they come in, though, it's
you put $100 down, and Ford was asking for the same thing. I think Ford, over the 24-hour period, maybe 12-hour period, from when they announced it to the next morning, had 21,000 pre-orders, and like Tesla had 205,000 when Elon did his Cybertruck introduction. Interesting.
The space truck.
Yeah, space truck.
The Cybertruck does look cooler.
Do you like that?
I kind of do.
Yeah,
I'm one of those few people that actually think it looks.
You know what I wonder if this period in time is with Elon Musk, and I'm not saying it's going to end this way.
Yeah.
But if anyone remembers the DeLorean from Back to the Future,
of course,
DeLorean
looks a lot like
had the futuristic truck. It was a stainless steel body, so it wouldn't rust. And then before you know it. Not. But it's different. It's a different
John
time.
DeLorean got up to some no good. Huh?
But that's a whole different time. But that's what the Cybertruck reminds me of.
Me too.
Of the DeLorean almost. Anyway, I think Elon. Tesla's not going to go under, is it? Like we're beyond that. I think we're beyond that discussion.
I feel like we're past
that, right?
Yeah.
Tesla is American Motors Corporation. They're going to get absorbed by Chrysler eventually.
Right.
All right, Hunter. What else you got?
Oh, that's all I have in
sorry.
relation to individual stocks, but I do have some other stuff that's more of a discussion oriented, and just to kind of to pose the question to you.
Yeah.
What do you make of TLT kind of struggling right here around the 21 and the 50-day? This is just correspondent to how the market feels about yields right now. I talked about it in the video. This morning, TLT tried to get above the 21 and the 50, kind of ran into resistance, and then maybe found a little bit of support around 137. I'm just curious what your thoughts on yields are.
Man, I love you today, Hunter. Let me ask Danny if I can we go over a few more? We got new toys. We got a new show. I think people are engaged. Can we go 5 extra minutes?
Sure.
Okay. I was going to do this as my intro to the show, but then I saw markets were pulling back, and I wanted to talk about that in the dollar. So I think that bonds potentially have put in a bottom here. And so I don't know if they go higher. But if they go lower, you're going to see gold sell off. And let me show you. Danny, I feel bad. Danny, do you want to come over my shoulder?
Do I want to do what?
You want to come over my shoulder and look at this chart? I feel like you can. We can do that, right?
Hold on. I was actually going to pull it up.
No, you can't see the chart that I'm going to pull up. Can he just take his headphones
Yeah,
off and
sure.
come behind me like we're in a 1978
Come
Owen
on
Mills
around. Yeah, that's
Owen
right.
Mills portrait.
There he
okay,
is.
there's Danny.
I feel like I'm going to see the Step Brothers.
Yeah,
Picture
that's
from the
exactly what it
movie.
is.
Big smiles.
So, boy, Hunter, you teed me up for something that I was going to start the show with. I really do appreciate that in all sincerity in the world. So here is a Fred chart. Again, you can email me. I'll be more than happy to send you these charts. So what you're looking at here is I'm trying not to have a gold fixing price and 10-year treasuries constant. And the blue is 10-year treasuries. The red is gold. And so you can see here where I'm kind of just tracing over, like where does gold kind of get a little momentum to the upside? It's when bond prices start to bottom. And so I can't get the hover over this chart to stop hovering over. But when you see bond prices just start to go up a little bit, you see gold start to go up a little bit. And you see this general trend, it's not perfect. There's no perfect correlations. There's nothing in absolution. But gold is going higher and bond prices have just started to just trade sideways. That's really good for gold. So if bonds are going to fall out of bed, meaning that interest rates are going to go higher, and that's the relationship, folks, if you don't understand it. So bond prices going up means yields are going lower. I think that's, if I'm writing the word gold here, I think that that's bad for gold. But, well, did I say that backwards? If bond prices are going high, no, bond prices going higher is good for gold. I'm sorry, I got myself turned around. Yeah. If bond prices were to go lower and interest rates go higher, that's bad for gold. And so I don't know where the interest rates, the Fed, I want to tell you the Fed's going to win this battle because I don't think the Fed loses. Like the Fed just changes the rules, right? If the Fed thinks they're going to lose, they change the rules of the game. And so, and so you got to keep that in mind. And so the Fed does not want rates to go higher. I don't know how they can stop the train though, because, but the only way you can stop the train is what you were pointing out, Hunter, earlier. For you were talked about copper coming down. So if inputs come off, and let's tie it all together. If inputs come off, like lumber started to come off a little bit, and oil has come off a little bit, that is exactly what the American consumer needs. And then you saw the housing numbers. I believe this week housing starts are at lows, and more.
Can't find any materials.
Yeah, you can't find materials. Anecdotally, and you know, I haven't got a Mark from Buffalo reference into the show, but anecdotally, someone in Mark's world was in the midst of wanting to build a house. You know, and the house from one year to the next, you know, from one period to the next, cost $100,000 more than the year prior because of the cost. Materials are just out of the roof. That is, you're like, well, Tim, that's anecdotal. No, go try to find brick. Go try to find. You can. Well, Tim, I can go to the Home Depot and find lumber. That lumber has quintupled since last year, and what contractors and people that do construction are having a hard time doing is convincing consumers to pay these prices.
Listen, we needed to do a little bit of put in some, for whatever reason, we had carpet upstairs in the upstairs bathroom. That's what the guy before us did. My wife couldn't stand.
Wait, he had carpet in the bathroom?
Yeah,
whoa. By the toilet?
Yeah, in the bathroom.
That sounds like something Danny would like.
Hang on.
This is a horrible idea.
Hang on, listen. No, I know. So we were getting it redone with, you know, the flooring, right? If you go anywhere, you can't find the flooring or the glue or the whatever. We went to Nebraska Furniture because they're such a big buy. They buy in bulk. They're like a Costco. Yeah. They got pricing power. They're one of the few places that you can actually get everything, and they'll tell you whether it's in stock or not. If it's not in stock, they'll say, we think it's going to be 2 months out, but it could be 6 months. Right. We don't know. But this, we've got everything in stock. So we picked one we really liked. They said, okay, we'll come put it in 2 weeks. They called us a week later and said, you know, the one thing we were missing was a special glue for this. It's glue. Like a wood. Yeah, it's like for the floor. The wood. And they said, so we got to wait. Well, luckily they got it a couple weeks later and we got it done. But you really have to pick and choose, and you can't get what you want.
Everything right now is having its toilet paper moment.
Oh,
and that's the problem. But look on this chart here of interest rates. So here's the 10-year treasuries. And so this is the you read this as 1.62. It's not interest rates. Look at interest rates have been trading sideways since the end of March. It's not interest rates that are keeping people out of homes or from buying things right now. It's supply shortages, and those will all eventually go away one way or the other. Either the supply chain catches up, or people decrease demand, and that's how you get more supply to the market. And so it'll be interesting to see how this prevails. To answer your question, Hunter, in a very long-winded way, and I apologize for doing so, I don't know where this chart goes, but I know that if it trades sideways or higher, that's good for gold. And I say that, well, Tim, why would you want to bring that all up? Because and gold, you can see here is hit the 30 ATR on the daily chart a couple days ago. I say that because a lot of people read into gold. Gold is fear. Gold, like they have some guy from MASH selling gold on Fox News who's puts the fear of God. They treat me pretty well too. Who cares, man? Like gold isn't that anymore. I mean, maybe some people buy gold because they're scared, blankless.
It's a good fear indicator, but I think it's more right now. It's devalue. It's a devalue trade and printing trade.
But it's the dollar. It goes.
That's
back,
what I mean.
Yeah. It goes back to.
That's the same thing with crypto.
That's what we were saying. With I want to. You said a very good point. I want people to understand it. The printing is all the money that's been printed. The money supply. There's never been more money printed in a period of 1 year than there was from March to.
And did you hear the Fed? They've got to increase their balance sheet by over. I mean, it's huge.
So, you want assets that don't lose their value.
Well, they can't
just
print.
Just by the real estate is one of them. Gold, in theory, there's all the gold in the world feels like 2 Olympic-sized swimming pools, I believe, something like that. And then crypto is thought to be like it, but that also talks about assets such as trading cards and art and non-fungible tokens. Even though all those markets are starting to soften up right now a little bit, it's still
is that a pause or not?
There's still the underlying reason has to do with all the dollars printed and what's happening with interest rates. Really good.
Hey, Tim, I got an interjection. It's off topic to a degree, but to give me mommy a shout out, she sent me an article about, I think it's some doctor in California, some guy named Newman, who passed away, but he's got like a $20 million card collection that's supposed to have one of the only Babe Ruths in the world. Is supposed to break the record in a couple of weeks at auction for the.
Send me that article. That's interesting stuff.
That card alone is going to be $750. Yeah, that card alone is probably half the value of his whole collection.
Look at S&Ps here.
It's $5 million, I think, is what they're projecting for the Babe Ruth, and then he's got a Mickey Mantle and a Honus Wagner or something as well. I mean, this dude's been collecting since the 70s and 80s, traveling all over the world.
All right, Alex, man, what you got, brother?
Oh, I can't hear him.
No. I can't hear you, Alex.
Wait a second.
Did he mute himself? He might have muted himself. That happens. Danny, look at the.
It's a courtesy.
You can't see the. I know you can see the SP charts on your charts on the phone, but this is the options expiration trade right here. They're going to try to pin this at 41.50. It looks like that there was some money at 41.75 ish this morning up there. They clear out those options. They sell all the options that people sold.
Mm-hmm.
They take the premium and then. It's
they don't want to get called away, so
after 10:30, all they do is we're the only market open now. So what's left to do? It wouldn't surprise me if this market came down to 41.45, 41.40 on S&P futures, which is about 10, 15 points
10
away.
more points,
yeah. And so, is there something wrong with the market if this market closes red? No, I don't think so. It's just well, we'll say that for one last thing. Do we get Alex back, or should I just go to Don? I'm going to Don.
We can try it out. Alex, can you hear us? Nothing, man.
That's all right.
Yeah,
let's go to Don. Don, what you got for the week? Moves you made? Things are going on. What's going on?
The key areas to watch is the NASDAQ 100, the QQQ, whether or not it can maintain its strength and stay over the 50 and the 21-day moving average. There's a huge battle going on right now between the 326 to 329 area on the NASDAQ 100. We know from historically speaking, we know that the markets work best when the major indexes are all trending nicely above their 21, 50, and 200-day moving averages. And it's really not a surprise that we're pulling back on the NASDAQ 100 today, as we had a nice bounce off of the gap down from Wednesday, followed through to the upside on Thursday, and now just ran into a little bit of resistance here. So keeping an eye on that. And then, of course, we got the Dow and the S&P got back above the 21 with their rallies over the last couple of days. So we want to see if they can hold on to their 21 day 21 exponential moving average. And the key level there on the S&P is around the 41.45 level.
Okay, I'm sorry. Let me go SPX 41.45. There you go. Sorry.
Right.
Yep, right there at the 21. Okay. What else you got, man?
Do the 21 over 21 later
yeah.
today, a couple dropping off, but for the most part, it's been we saw some undercuts with the gap down on Wednesday, but a lot of them reclaiming the 21 by the end of the week. But some weakness and some dropping off, but we've got actually plenty of new stocks ready to replace it that are in low risk buy areas. And there's a couple of growth stocks that have stuck their necks out over the last couple of days. We'll be keeping a close eye on that next week to see if they can continue to hold their strength.
Hey, and Don, you're doing that lunch and learn, the next lunch and learn on the second Wednesday of next month. That's the 9th.
Yeah, it's going to be 6/9. I'm going to be here a week longer than I thought. So 6/9, I'll be back in Florida, and that is when I'll be doing it.
Okay, so that's Wednesday at noon, the 9th of June.
Yep.
And it's 1 hour. It's live during live market hours, and you can ask quick Q&A at the end. You can just go to Revere Asset and just hit the webinars button, and you can put your email in, and he'll send you a link when he's ready to go that day.
Awesome. I'll tell you what, this is a good jumping off point. Danny, why don't you give us I've got one more thing when you're done. Mm-hmm. But why don't you give us the normal outro, and then I've got one more thing.
Folks, listen, if you like what you heard, please tell a friend, tell a neighbor. Just send them to revereasset.com. We've got plenty of free complimentary research. You can just go to the subscribe button, put your email address in there. We won't email you or spam you in any way. It's up to you to reach out to us if you want a complimentary portfolio review or just have questions. And this podcast every weekend and our daily market insight video, which is a short 10 to 15 minute, depending on how inspired the guys are that day, video on the markets that day, what's going on, maybe some moves we made, some investment ideas to research. It's not advice. If you want advice, come out and talk to us. And then also to the right, there's a webinars page. That's how you sign up for Don's lunch and learns that he does about once a quarter, time permitting. And by the way, we're not only did we upgrade and revamp this radio show, we're going to in the process of doing a whole website review upgrade. So we're going to kind of consolidate that so it'll be easier and more user friendly. So just be patient with us. But if you go to the market insight section, what's that you call? Then you can look at all of our research. We don't
ever pull
videos down. It's all archived. So, but you can call us old school at 855-REAL-WEALTH, or you can email any of us at Dan@RevereAsset.com, Tim at Revere Asset, Don at Revere Asset, Hunter or Alex at RevereAsset.com.
So let's do this real quick because the markets, you see markets near new highs, and I don't think that the market is easy. Per se. And I want to show people something that I covered just a few nights ago, and I think this will help. If you go to Daily Market Insight, it just says bear down. That was just a bad day in the markets. And so good finish, bad day in the markets to start. But if you look at like SPY, and there's a commonality here. And I always try to leave folks with something practical, not theoretical, practical that they can use in the show. And here's SPY. Back in the end of March, beginning of April timeframe. And you can see that you get that gap above the 21, which is that pink line. And then if I do the Q, what's going on with the Qs, and you can see here's 329. The markets, they take the 21 and 331, and then 4-1, you get your second close above the 21. And that's in sync. And then you get, let's see here, the Dow. We'll do DIA. DIA, strong. I mean, comes back on 324 to the 21 and doesn't look back since, till now. And then how about the small caps? The old IWM, the small caps. And just a hot mess here, Daniel. But even they at 331 got a close above the 21, 2 close above the 21, but the small caps have just been nothing. But when you see all 4 indices do that in synchronicity, that felt like a word.
Yeah. That is a word.
Oh, that is
synchronicity is a word, Tim.
Oh, nobody more shocked than me, as Daniel said.
Yeah.
So, people who are new to the show don't get the joke that's been going on for years.
Tim and his Sniglets.
So, when you see the synchronicity of all 4 major indices,
and you pronounced it right, too.
Oh, that's a good day for us. Let's call it a win for the home team. So that's when you can be aggressive with stocks, in my opinion. Because you can get some traction, you can get some run. And in terms of importance of the markets, you can say S&Ps and NASDAQ are equal. A lot of people put the NASDAQ in front of the S&P. I say the S&Ps and NASDAQ are equal, then it goes the Dow, and then it goes the Russell in terms of importance in my mind. But when you get that kind of synchronicity and all 4 are jumping above the 21s, that's when you can buy stocks on the NASDAQ. It's when you can buy stocks on the S&Ps and Dow. And you're going to get this kind of strength. But when you go back to...
When they're split, you got to be more selective.
When you get 2 above the 21, this happened recently. When you get 2 above the 21 and 2 below the 21, meaning the S&Ps, had a good moment in time, and so did the Dow, but the NASDAQ and the Russell struggled. That gets you chop. And chop means you get a couple days of outperformance in what you own, and then in one fell swoop, a couple days of outperformance takes twice of it away. Like if you made 1% or 2% on something, in one day, it doesn't matter the indice, you're giving up 3 and 4% on it because that's the nature of chop. Chop wears you out or scares you out. And choppy markets, which is what we've been in here for, it feels like
a couple months.
No. You just set new highs in the SPY, but you've been in chop for like 2 weeks, 5 trading days a week. It's not an easy market, and the media doesn't break it out like this. Like the media, like whether it's TV or whether it's the blogosphere or the worst of them, the worst offenders of them all, FinTwit. #study. Study what? Study practical information that can make you money. And so that's what they don't point out, and that's what a lot of FinTwit doesn't understand. And so that's why every show I try to leave people with something practical that I figured out through the loss of my own capital. Why am I losing money in this environment? And the thing that I explained on Wednesday of this week was one of the things that I just learned over the years, that the chop comes in when you're split 2 and 2. And that to me makes life so much more difficult. You might hit a home run. You might get the stock that actually is the leader, but it's just so much harder. I want to do things easier, and I want to do things where the wind's at my back, and the wind is clearly at your back when all 4 of those are happening. So what is it? So someone at home cynically might say, well, what am I supposed to do, Tim? Just sit on my hands? Yeah. Just trade light.
Or hold, cut your position size, raise more cash. Don't be as aggressive.
All the above. So take us home.
We'll talk to you next week on Your Money.